Hello everyone, welcome back. This video is going to talk about how to qualify for an FHA loan if you've got high DTI. So if you're here, you probably already know what DTI is, but I'll just explain it again anyway. DTI is debt to income ratio, and that's essentially your debt total monthly payments that you would be getting in your new mortgage, plus any other monthly payments that show up on your credit report, all added together, divided into your gross monthly income. Okay, so the maximum total DTI that FHA guidelines typically permit is 43%. However, there are some lenders that will allow and will originate your loan even if your DTI is at 50 or even greater than 50%. There are ways, if possible, to get it up to even 60, although that's quite a bit of a stretch. You'll need some compensating factors if you're going up to 50 and beyond on the DTI. I'm going to do a whole video on compensating factors and what those are and what those compensating factors would be and what they mean to you. But for now, just know that if you do have high DTI, you can get an FHA loan. If it's over 43%, you're likely going to pay a little bit of a higher rate because some lenders that do allow for a DTI above 43% will have a rate add-on. But know that it is possible to get that. Okay, so another way to help mitigate that is if you find a way to pay off something that that has a high monthly payment. So for example, let's say you've got a high car payment and it's $400 a month or $500 per month, but you've only got 4 months left on it, or just a little bit. One thing you can do if you have the money is to pay that off, and then or you can get it paid off at closing even, and then that will be taken out of your DTI calculation. If you don't have the money to do that, you could check with a relative or a friend. You're allowed to get gift funds for your down payment with an FHA loan, which I did a video on, and I'll link to that down below. Okay, but rather than get the gift fund for your down payment, you can have them pay off some of these debts for you and then maybe reimburse them later. So there's just a lot of ways to handle high DTI. The first one is to find a lender that will allow for that, and a few of those do exist. And then the other one is to pay off those high monthly payment items that are on your credit report. If you don't have a lot of items on your credit report and you're saying, hey, look, I'm just trying to get this loan, and I want to buy a house, and it looks like my DTI is high. Well, the other thing that impacts your DTI would be your taxes. So if you're shopping for a home, see if you can find a home that has lower taxes. That'll help with the DTI problem. It might not make it all go away, but it can definitely reduce your DTI because you've got lower annual taxes involved. And if you're looking at a condo or a townhome instead of a single family residence detached, those have homeowners association fees, which will be calculated in your DTI also. So maybe try to look for a property that doesn't have HOA fees. That'll help with your high DTI problem. Hopefully this will help, and you'll be able to move ahead with your purchase despite having high DTI. If you have any questions at all, just put them down in the comments below. I'll link to our article that talks all about qualifying for an FHA loan with high DTI, and then we'll be able to also find a lender for you too in case you're in the market or you're just rate shopping. Okay, so hopefully this helped you. Please hit that subscribe button and bell notification icon, and check back for the next video.